This is a big ET Now exclusive. We get you one of the most authoritative voices on the economy as well as the markets. Yes, I am talking about Mr. Sanjiv Bajaj, who's just taken over as the president of the CII. This is the first interview he's giving, and it is to ET Now. Mr. Bajaj, welcome. Thank you for your time. You still owe us an interview as far as the Bajaj twins go, but today we're going to talk more about the macros, the state of the economy, and the India Inc.'s action plan. Where would you like to begin? Inflation, bond yields, US Fed?
I believe the opportunity that we have to look at over the last 2 years, coming out of this pandemic, and hopefully we are coming out of it, as well as keeping in mind the geopolitical changes that we have seen, is that India can become the manufacturing hub to the world. That's what we need to focus and build on. In this, our government has already taken a number of steps, from the PLI schemes to cutting corporate tax, implementing a whole set of measures for improving ease of doing business. And this is what I believe we need to focus on. We are seeing the last 2 quarters of being reasonably strong growth coming from our domestic economy as well. Now, we know that this war has created some amount of uncertainty, and we hope it gets resolved sooner rather than later for the humanitarian crisis that it is. But it also has economic linkages. And we have seen the impact it has had on oil, for example, as well as the resultant impact on inflation and the actions that RBI has started to take, which is normalizing its policy on interest rates. So there's a lot that is happening over here. I believe that there is a need to address the inflation first, which will happen by a combination of some of the rate hikes that RBI has started. In addition, to the common man, inflation hurts with food prices and fuel prices. We are hearing, even though we are in a heat wave in so many parts of the country, we are hearing of a normal monsoon, which should take care of food prices. So fuel is really one issue, current issue that needs addressing. And we hope that a collaborative effort between the center and the states results in lower taxes on fuel, so that it lowers the burden on the common man's pocket. I think it's the right thing to do at this point of time. Plus, it will also have a multiplier effect on the economy, because that money saved will go into consumption, which will get the balls rolling for production and new investment as well. So all in all, I believe that as an economy, as a country, we've come out of this pandemic quite well. Still need to be sensible on safety so that we avoid any future waves. But start focusing on growth this coming year. And given some of these uncertainties, as CII, we are currently projecting...
But Mr. Bajaj...
Yeah.
Mr. Bajaj, if you allow me to interject here, because you've said a lot, so if you could pick it up one by one. We are coming to the end of an earnings season, and there has been one trend, and it is pretty apparent. It started in the previous quarters that margins are being squeezed out because of rising inflation, according to our own estimates of CPI, which is at an 8-year high. So going forward, when cost of capital is going to go up and there's rising inflation, which could hurt consumerism, how prepared is India Inc. To do business? We are just starting to see the turnaround in the capex cycle.
No, that's a very fair point. But memory ends up being short, Nayantara. If you go back a couple of years and we look at inflation numbers, if you look at interest rates, and you look at where India Inc. was versus now, if you look at profitability numbers, I must say India Inc. has done a great job, supported by the government, in how we've come out of this pandemic. So yes, we have seen 2 quarters of rising input costs, but look at the effort India Inc. put in FY21 through the first year of the pandemic in tightening its belts, improving greater efficiency. You've seen record profits as well. And some of that margin has been shaved off because of rising input costs. I believe that some of this cost will get passed on to the final customer. Some of this will get alleviated through higher interest rates. So we are going back to a normalized cycle. We are not nowhere near still the normal cycle of 2 years ago, but we are going back towards it. So what we are seeing as something negative, to me, is more a normalizing to where we were back then, but being in a far stronger position. Also keep in mind, and that's the last thing you ended up with, and my answers are long because you asked so many questions in that one question of yours. But we are starting to see investment in number of sectors, not just in commodities, not just in chemicals. We are seeing it in transportation, we are seeing it in real estate and housing, and that's very encouraging. If you see overall capacity utilization now is north of 70% for many sectors. So I believe that if we take care of inflation in the short term, especially for the common man, we should start seeing secular growth.
The expectation, of course, is that, in the June policy, maybe RBI Monetary Policy Committee will recommend yet another rate hike. We had that surprise one on the 4th of May where the RBI didn't even want to wait till the evening to see what the US Fed would do. Some see that as, is there really bad data which is out there when it comes to the economy, to consumerism, that they didn't even want to wait till the night of the US Fed? What did you make of it?
If you look at RBI over the last few years, they've been very steady in their expectation of inflation and growth, accommodative towards growth. And they've also put the right triggers in place, which helps us think through how the interest rate cycle would move. So I would hope that one swallow does not the summer make, and in the next monetary policy, we hear from RBI similarly what's the glide path forward on taking rates up. Naturally, they're not going to tell us when the rates will go up and how much, but if one knows what are the triggers based on which the MPC will base their parameters on, it provides the industry with a way to prepare for it. We are reasonably clear that we will see a couple of more rate hikes at least over the next 12 months. But as long as they're graduated or more as they're calibrated, it helps industry align with it.
Yes, so let's see. We don't get the kind of glide path that path that the US Fed does provide. We'll of course have to also wait till June to know what it is that the RBI is projecting as far as inflation goes. But Mr. Bajaj, what we've also seen this earnings season is the bank's credit growth going up, NPAs becoming at least a non-issue for now. So in this rate hike cycle, what is it going to mean for banks as well as NBFCs?
I believe if there is demand on the ground and there is new capex coming in place, there will be enough credit available to support that. I don't see that as a problem in the short term. As you're saying, bank balance sheets have become far healthier, at least for most of them, and that's why they should be ready to lend. But I also believe that the government must continue on its cycle of divestment. We are encouraged with last year what happened with Air India and the LIC IPO. Okay, it may not have opened up strong, but that's part of life. Overall, it is the largest life company with 50% market share. It will help them compete with the rest of us as well, and I'm sure it will bring out the best in each one of us. The government has said is moving ahead with the Pavan's divestment. That is in the newspapers today. So the two public sector banks, the one public general insurance company that the government has talked of divesting, it should continue to do that. It brings in money for the government. It makes it very clear that the government is acting on their intent that government should not be in business. And it will bring in greater, I would say, efficiency, productivity, and competition in the private sector.
So we've talked about monetary policy. So what kind of fiscal policy would you like to see from the government when it comes to tackling inflation? Let's also not forget, we're talking at a time when the rupee is also in a free fall.
See, rupee should find its own level. It is just that as an industry, we would like to see lower volatility, and then we can align ourselves with it. One part of the industry gains from it, the other sees it as a higher cost. So rupee should get to its own level, but in a graded manner. I would say from the government side, we talked about cutting taxes on fuel. To me, that's the single largest point. Plus, when we look at the rural economy, which just slowed down, the agrarian part of that, I believe, has a good chance of getting back on its own with a good monsoon. The non-agricultural related will continue to need support from the government. Beyond that, as long as the external situation on war resolves earlier than later, I believe the private sector is geared up for strong growth.
Okay. So what you're basically seeing is that you would like the RBI to intervene to prevent at least jerky movements of the rupee?
Correct.
Okay. The channel checks do indicate that's what the RBI has been attempting to do. Mr. Bajaj, which camp do you belong in? When we see where the bond yields are, the inversion also that had started to take place, recession coming?
I don't think so. We are not a working capital economy of the West. We are a capital investment economy, which is driven by a lot of first-time consumption, a lot of repeat consumption. We still have huge opportunity to take almost 300-400 million people out of poverty in the coming years. They are all future consumers. We have a very large proportion. The majority of our population is the youth. We need to find ways to train them, to skill them, because they will provide job opportunities. As long as we are focused on this, as an economy, we may have a little lower growth, but I don't see ourselves getting into a situation of recession.
CII, of course, has revised lower its growth projection for the new financial year.
That's right, and that is linked, as you know, to inflation and this additional uncertainty of war, which wasn't there last year when we had a projection for this year. And if you see, that's what RBI also is indicating. That's the sensible outlook at this point of time. There are positive tailwinds that are possible. Early end to the war and the continued private investment, which should set the cycle rolling as well.
So, Mr. Bajaj, because you're talking about the war, what it has also done is what? Foreign investors are not doing business anywhere in China. Now they're not doing it in Russia. So even though India was being seen as the brightest spot on the planet, it's looking even brighter. However, whether it's in the stock markets where we're seeing foreign investors press the sell button, we're also now seeing other kind of M&A activity, like for example with Wholesome. Why is India the investment destination we all believe it to be?
We believe India clearly can be, and a part of doing business is there will be buy and there will be sell transactions. The fact that these transactions happen smoothly, they happen transparently and in a short period of time is the strength that we can provide to investors, whether domestic or foreign, of what we offer. And the geopolitics that you talked about presents a real window of opportunity to India to become that manufacturing hub for the world. But we must keep in mind that we are not in a stagnant world. There are other countries, maybe smaller than us, but there are other countries also racing ahead. And that's where we need to do more as government and industry together so that we get a large slice of this additional sourcing opportunities that so many companies and countries around the world are looking for.
So, Bajaj, I can't be interviewing you, not asking you about one other trend we're seeing in corporate India, and that is this heightened M&A activity, right? Whether it started with PVR, Inox, the proposed merger of the HDFC twins. We've all just heard about the Wholesome deal with Adani emerging as the bid winner. Are you expecting heightened M&A activity to continue?
These end up being opportunistic, Nayantara. The positive of this is the enabling environment which makes it possible. For a few of these acquisitions that have taken place, we've also seen a birth of 100 unicorns. So it's not either or. We need to create that environment where you can see 1,000 flowers bloom. Some will be smaller flowers that become bigger, and many others will be seeds getting converted to flowers. And that's the enabling environment that we need to continue to strengthen.
I don't, there is a phrase, right, that it's very easy to talk oneself into recession. But because you brought up startups, we've all read the same headlines, right? The Tiger Global has lost $17 billion. SoftBank has lost $28 billion, record loss for the Vision funds. Back home, we're hearing about layoffs, trouble in the startup sector. Is it a bubble? And this is just when India's entrepreneurial spirit was being unleashed. Would love to have your views. How are you seeing that space?
I actually think of it as a very strong balancing factor where good quality businesses will get capital, will continue to get capital, will continue to grow. Businesses whose model isn't great or get challenged by a more competitive model will either have to reinvent or die. This is really the circle of life. We can't be in a situation as business where it's unidirectional, where businesses just continue to stay alive or are forced to stay alive. We must have an efficient system of restructuring, of disposal, and of recreation, like it is for life in general. And that is what we are seeing with the startups. It's also equally true that in the last few years, a lot of excess liquidity went chasing a fewer set of opportunities. And that's where you're seeing some of the valuations falling at this point of time. But on the other hand, you're seeing new unicorns come up every month, new business models come up. They will challenge earlier business models. They will challenge incumbents as well. At the same time, I believe that a number of incumbents are also building technological capabilities to take on startups. And this is the vibrant economy that we need, where some will die, but many more will live and grow.
Absolutely, too much liquidity chasing very few opportunities, which is what we saw maybe in the high PE stocks also on the Nifty. Sometimes Bajaj Twins is also spoken about like that. But so you don't think it's a bubble, and you don't think that we have too much to worry about? Because the reason I'm asking you this is, it's very easy to talk ourselves into recession these days. When you pick up a newspaper or you read the news or just want to be updated about current affairs, it's all bad news. Bad news in the stock markets, bad news on ground, layoffs, markdowns.
I agree with you. Sensational news sells, bad news sells. It doesn't mean we ignore that. But there are triggers that it is pointing to as well. But smarter businesses know how to overcome that and prepare for tomorrow. Because while the sun sets today, it always rises tomorrow. Never forget that. You have to encounter the period of darkness before the sun rises again. But as long as you know the sun is going to rise, you are prepared for that.
Once again, I come back to the point of inflation. Your channel checks, look at the companies you head, your CII president. Has it started to hurt consumerism as yet? Because we have not been able to capture that in the earnings season so far. That's perhaps going to happen later. So from the start of this financial year, it must have started to impact consumerism.
So when we look at the sector, and that's what I would like to focus on, we've seen some softening in rural demand, and that's why I mentioned that one of the things that the government can do is continue to support non-farm income there at least. But urban demand continues to be strong. Now, it is something that continued high inflation will impact in the coming quarters. You have to also keep in mind that the higher interest rate cycle, by the time it moves from the financial market to the real market, it takes time for it to flow. So I think you will continue to see a couple of more quarters of reasonably strong growth. But that's the window of opportunity that we have to address some of these issues. And also maybe with a little bit of luck on the external side, we can continue with reasonable growth towards the latter part of the year.
So what all can be done to give an impetus to the rural economy? You've given some examples, like for example, reducing fuel prices, taxes on fuel prices, and impetus on manufacturing. But besides the fuel price one, all of the others are very long term.
No, so if you see the government-funded programs, the work programs, the building of this requires employment and also puts money in the hands of the people. So this is something that we would suggest as CII for the government to continue doing till other sections of the economy take over. And as I said, on the urban side, a benefit on fuel prices could go a long way in just spurring the individual consumer to get back into the demand cycle, so that a potential slowdown in demand, which one can expect with rising inflation down the line, can be averted, or if not averted, at least minimized.
We also see governments tending to trend towards protectionist policies in the times of high inflation. There are different reasons for it this time, but India is the world's second largest wheat exporter. There has been a ban on wheat exports. There might be some on cotton. Cotton prices have spiraled. This time around, it's for different reasons, but is this also another way to go?
Trying to feed our own people is not being protectionist, it is being sensible. Nobody could anticipate this heat wave and the extent of that. Even then, I believe our government has said that country to country, based on their requests, they would support them. So the humanitarian cause is very much there. I also read a flash today saying that the government has relaxed further wheat export. So we have to keep in mind that we are in a very uncertain environment. And we first thought of it as political. Look at it, it's even weather related now. And hence, whether the government or the private sector or as individuals, we have to be on our toes. We have to be able to quickly react to what we see as external triggers. And that's the kind of world that we are in.
Mr. Bajaj, as we come towards the end of an interview, I would like to also focus on the sectors that you really understand. You're the most authoritative when it comes to that. So at a time, and I've asked this earlier, but I'd like to go more into detail. At a time when we're going to see cost of funds go up, we're likely to see more rate hikes go up, more rate hikes to take place. How to make sure that the bank's balance sheet remains healthy? Because this is also at this time when delinquencies typically go up.
If you see in the last couple of years, Nayantara, the delinquencies went up because of a whole set of extraneous factors, including the lockdown, where people couldn't go to work, they couldn't earn money, and that's why they couldn't pay. It was also the moratorium cycle that the government had to put in place to reduce that suffering. We are out of that now. Most banks that either raise capital or provided for potential loan losses are even writing back some of the excess provisions made. As you know, the credit cycle has started off. It is not still where it needs to be. So as lenders, we now need to focus on good quality deals. The private sector investment cycle is coming back. Back good quality promoters and good quality business opportunities. And this is the time to expand balance sheet with good quality lending. And if that happens, that should help reduce the NPA issue as well. So good quality, smart lending is what is required.
The markets at least seem to be preferring the public sector lenders to the private sector lenders at the moment. What did you make of that?
If I was driven by where the markets move every day, I would have nothing better to do at work. So I'm less focused on where the markets are in the short term and more on where they go in the medium to long term. And we know where they've gone in the last decade.
Okay. With that, I know our time is up for the interview. So Mr. Bajaj, we got to host you after a very long time. Thank you so much for being so candid, given the kind of volatility, the uncertainty that we're seeing, the expectations from the government, and of course, India Inc. Started to see the capex cycle turn around. Hope it stays that way.
Thank you. Good speaking with you.